So since a recent video, a load of you have been messaging in asking, hey Jamie, would you still be investing in the London property market right now considering everything that's gone on in the last year? Well, guess what? That's exactly what I'm going to be covering in today's video. So there's no doubt that the property market in general has kind of, I don't want to say taken a hit the last year, it's kind of been all over the place. So if you don't know, the last 12 months as of this filming right now, the property market has actually increased by 10.3% in the residential property market in the UK. How insane is that considering everything that's gone on in the last year? And I don't need to spell it out, but you know, all of us being at home, the isolation, the fear, retail kind of closing down, all of these things kind of go towards the idea of a market collapsing maybe. And actually, if you remember from the first closure of the country, and what ended up happening is actually property prices went whoop, and then went straight up, and all these economists were saying it will be a Nike tick recovery, which, you know, and lo and behold, they were right. And so why is that? Well, the market's been heavily propped up in a lot of ways, some of them positive, some of them kind of negative. So you've got the stamp duty, for example, that's now sort of coming out of play, but these delays in stamp duty or not paying stamp duty, and obviously what that means is people can pay more for a property in terms of the cash that they're going to have in their bank. Number two, we've had 5% deposits coming in, which could be the best or worst thing for the property market right now. But again, what does that mean for somebody that's able to get a 5% deposit that was been waiting to save up? It means they can buy something today instead of waiting another couple of years, or it means that they can now buy a more expensive property. What tends to happen is actually that inflates property prices as well. Then you've got things like furlough going through, giving confidence in the country and businesses. You've got C bills and B bills propping up businesses that they might go out of business in the next year or two, but that's really accelerated the growth, and none more so in some areas of London. So what area of London's going to be best? So let's get real. When you say London, what do you mean? Because there's a lot of zones within London. A majority of us means central London. And there's no doubt about it, central London market has taken a really big hit. A lot of offices closing down, especially the commercial space, is so expensive. But a lot of them closing down, a lot of people working from home, a lot of people starting to question, you know, actually productivity's dropped by 5% maybe, but the office costs were fairly substantial. So maybe we need to look at something different and having a work at home policy. And when you've got that sort of policy going on, which means you can work for a London-based business, would you choose to live in central London? Maybe, because I think it's a pretty awesome place, but a lot of people wouldn't. What this means is actually a lot of people going out to more affordable settings, and naturally with the economic supply versus demand, if the demand is dropping but the supply is still there, will rents start to follow? So the first thing that I like looking at is, let's narrow down that location. Saying London, you might as well say the northwest of England. It's like London is absolutely huge, like absolutely massive, and you've got prices in that version of London across all of the zone 1 to zone 6, whatever it is. You've got properties from 100,000 all the way up to 200 million for a single property in central London. Okay, so we need to narrow that down a little bit and really breaking it down into the quadrants. So you've got north, south, east, west, and southwest, whatever you want to go into. You've got the zonage, and of course you've got central London and the city of London within that. So what I kind of want to concentrate on and say, maybe we'll say where I'm not going to be looking in London, and that's going to be around the west central area. So anything above £1 million as a property purchase price, I'm typically going to stay away from, and it's for two reasons. One, I don't have that sort of wedge lying around every 5 minutes, and I like building an aggressive portfolio. And if you are watching this and you have got that sort of cheese in your pocket, let's have a chat, see if we can do something together. But a majority of us don't have that lying around. The other reason is the luxury real estate or luxury property market in London has definitely taken a hit. And that's a couple of reasons that's really impacted that. Number one is the foreign investment. So foreign investment has been heavily stumped over the last year in the UK. A lot of people just a bit more cautious about where they're placing their money right now. And as London as a whole was impacted so much, a lot of people didn't want to plow their money into it like they have been for the decade before it, propping up the market again. The other reason is stamp duty. Okay, so there was a big increase in the demand for this, and now that stamp duty mitigation has gone out of play, what that means is people are now offering less and stepping out of that million-plus market zone. Well, the problem there is how many places in true central London are you getting close to less than a mil? Well, maybe a shed or a kennel, but I'm assuming you're interested in buy-to-let property. So where do we go? So when we're narrowing down these locations, I always think you need to be thinking about strategies. Now, I'm assuming the majority of you are interested in residential, not so much industrial or office. Maybe we could do some more videos on that. But from a residential point of view, really it's going to come down to a few things. You're going to have your buy-to-lets, maybe some serviced accommodation, maybe HMO, which is a house of multiple occupancy. And actually what I think we're going to start seeing some areas, which is really exciting in London, is some lease option opportunities. Now, it goes without even saying flips, assisted sales are going to be great strategies in high value areas. But you can literally do that in anywhere that is in high demand and make a good margin. But let's focus on assets, okay? Ones that you're actually looking to hold on an ongoing basis. The majority of people that watch my channel are interested in buy-to-lets. So let's kind of go down that route. So the first thing you need to be really understanding is why people invest in London in the first place. Well, it's often not because of the cash flow. If you've got a couple of 100,000 and you want like a job replacing income or something like that, honestly, I would personally invest further north. You get a lot more bang for the buck, and the rental per 100,000 is so much higher up north than it is in central London, believe it or not. So a lot of my investors with APG, where we help build hands-free portfolios in and around Yorkshire, they're enjoying 8% return on their money plus the capital growth that comes along with that. So why do people invest in London? Well, usually it's because of the capital growth and demand. There's not guaranteed, but is a fair prediction moving forward. So then when it comes down to that, I'm kind of thinking, well, I don't want to be at a massive cash loss or net cash flow, a negative net cash flow on a monthly basis. But I also want to be washing my hands, you know, washing my face and earning something through capital increase. So what sort of price ranges are we going to look at for that? For me, it's going to be anything between 300 and 600,000 to have a positive net income on a monthly basis. So for me, I like investing in areas of London that, considering London prices, are actually a little bit lower priced to the norm. And I don't really want to be in central. Now, the reasons why I said why the market's been propped up, I'm not saying propped up in a good way. I do think that at some point there will be a correction, and I personally feel central London is going to feel that impact more than most. So the 5% deposits, the stamp duty mitigation, the fact that you can get your furlough, the C bills, the B bills, remote working, all of those things kind of putting up this perfect chemical storm that can explode at any point. And I actually think it's kind of like, you know, building a ramp with some straws underneath it. And it's just getting bigger and bigger and bigger. And at some point when it collapses, the longer it goes on, the worse it's going to get. And how much longer can they prop up that economy there that's centralised around London? Now, do I think there's going to be a massive correction there? No, I don't think it's going to be huge. And I probably wouldn't be bothered if it were a 10-15% correction, because it's not that big of a deal in the grand scheme of things. But I'd rather protect myself in something that I think is going like that. So I guess the question is, and to wrap up this video, where would I invest? And for me, it's all about East London. I'm talking about the areas like West Ham, for example, that 10 years ago you wouldn't want to buy a property there at all. And yet, over the last decade, all of those areas, Mile End, places like that, has been massively gentrified with a load of development, a load of investment, and there's a bit more hipster around there, coffee shops popping up left, right and centre. And actually that is a sign of the times where a lot of the younger people that are hustling and bustling, earning the money, pumping it into those local economies. So when people say, for example, Islington, which I know is not quite the same location, but the same sort of demographic, and if you walk around you see all of this cool stuff going on, that's something I can get behind because I genuinely believe in the future of that generation, and I know how that generation like to spend, and it's often locally. People like that, they're a lot more conscious nowadays of locally sourced this, locally sourced that, and all of that reinvestment into the development and infrastructure in the area means one thing for me in terms of capital growth and prices moving forward. So the Islington property that we bought for, I can't even remember, around 400,000, even if I needed to rent, I'm going to get a great return, and if I held that for the next 10 to 15 years, it would be a phenomenal return on capital employed. But that's just my overview, okay? The bottom line is, everywhere can be a good investment. As long as it's got around 50,000 inhabitants or more in the area, you're gonna have enough demand. But I also look at the local economy and where I think is an exciting venture moving forward. But hey, that's just my opinion about London. If you invest in London, where do you invest and why? Let me know in the comments. I'd love to get some insight. Maybe I'm missing something. And for those of you that have chosen to not invest in London, why? What's the big fear? Is it just too expensive? Have you gone up north to the mighty Yorkshire? What's your reason? Let me know in the comments. I love to understand a bit more about you, help each other and educate each other to move us forward. And if you got value from this video and made it this far, I would really appreciate it. It helps the channel grow just by hitting that like button. And obviously, if you are new to the channel, make sure to hit the subscribe and the notification bell. And hey, if you've got particular value, make sure to share this video with your friends, and I'll see you in the next video.